Good weekend, all. Ira Epstein with your Spider ETF Weekly Edition review. And this is for Sunday. We're getting on to 2:30 in the afternoon, and that is April 3rd, 2022. You know, this is a strong month coming into. April is one of the strongest months of the year for the S&P 500. Out of the past 25 years, you have had gains 21 of 25 years. So it's not infallible, but it ends up typically with a gain. So that's what we have to look at and consider. In my futures market research, I put some charts showing just what it has done historically. It's always good to know that. It's important to understand what you're fighting. And the gains, when they've been there, well, they're moderate with the exception of 1 year, 6% loss. So it can be big. This is an unusual time. We have inflation. We have the war, more war crimes. I don't know how Russia thinks it can get away from them, other than they are saying that the Ukrainians are staging them, that they go in and they recapture a town and they will, the Ukrainians that is, will cut off a head of people, it'll put ropes behind their back and shoot them in the mouth. And of course the Ukrainians are stealing the washing machines and the dryers and the refrigerators, whereas the other reports are saying that's what the Russian troops are doing. The important thing is there are war crimes, and the world can't ignore it. Now, the European Union is now saying they've seen these pictures, they're going to crank up the sanctions again. And to my surprise, Germany has made a call today. How do we get off of and how do we get away from importing Russian natural gas? Now, if they do that, there's $316 billion that comes from Europe and buying that gas. China's not going to absorb it all, nor is India, their new friend, India. India had best be careful how close it wants to get there. I think it would be a terrible move for them to do that. But in any case, it's the way it is. And Russia has a few friends. It's got Cuba, Venezuela, Iran, obviously. It counts China, and it can now count India, I guess, in that parade. We'll see. But those would be the people that have to come up with it if the world decides to get away from their energy. It's not practical. So you can hear these calls, but it's just not practical, and that's the problem that you're going to have. One of my favorites has been mining, and I've mentioned that. I started the year off saying I had two favorites. I had copper, and I had the mining sector. Those are my favorites for the year. You know, we all have to give predictions. It's expected. Nothing else that I really favor. And I feel still pretty good with the miners as to how they're going. You've still got higher lows, higher highs, which is a swing line. Swing lines measure if you're making what's called a trend. There's a way that you draw them. I teach it in my charting course. I created this study, so I think I know it better than anyone out there. And it looks at 5 things. You have a higher high day, and low day, an inside trading day, or an outside day up or down. Those are the 5 parameters. And it sets exactly how the line will be drawn. You can write it, I guess, on your own charts as well. It's in all of our charting software, and that's what I use. So to break the uptrend, you'd have to get back under 53.20 to break the pattern of higher lows, higher highs, which means you'd be risking nearly $9 if you were to buy here under the current pattern. That's a pretty big risk. It's 10% of the price. When you look at how the moving averages are lined up, they're bullish. You have the shorter term 18-week average over the green, the 100-week, which is over the 200-week. That's a classic bullish setup. So where's the resistance if it's not a moving average over the market? It's likely the upper Bollinger Band. And this market had a pattern for, let's count this. It started hitting back here in June, and this is June of 2020, getting to the 18-week average, and it just kept hitting it. And you narrowed in a band. Now that either means as we come out of this, if it's the upside bullish for a big base, or the downside bearish calling to get to these 2 averages as a minimum. The market comes up on, and this is 2022 now, February 11th. And if we take a look at this, it closed at 48.40. And the next week we get a close that's at 49.40. Now the high of that week was 50.78. which is $1.38 from this low. And if you take a look, if you add $1.38 to this, this was in the top part of the market, but not the top quadrant. So I can't say it was a breakout. It was certainly a move to the upside. Here's your real breakout. You're at the top quadrant here and here. And I know you'll say, well, that's delayed. It doesn't matter. That's your breakout. When you're in the top quadrants out of it, now I'm going to look and say, you're not going back under these lows. Otherwise, this just will be a big surprise. And then this is all noise in the market. I didn't expect that. I think the market's got legs to it galore because of the length of time that it's spent here. That's my point. I don't see it ending. Yes, there can be corrections along the way, but I think it's got quite a base to go higher. Momentum is also embedded. What does embedded mean? Indicators have a tendency to go from neutral to overbought, oversold. Sometimes you can call something, and that's what I love about slow stochastics, over MACD. It tells me the market is embedded. Embedded means the two numbers that make it up have gotten over 80 and they're going sideways for several days or more. Momentum often leads price. I believe it leads most of the time. So if the red line closes back under 79, that would tell me a correction's in line to maybe get back to wherever that 18-week average is at that point in time. It could take a week or two, and that number would move a little bit, but that would be the objective. Right now, it's telling me that on breaks, the market's being bought by the pros. When I come to KBE, and this is your your index that follows bank indices coming down. This market on the dailies had a terrible week, and now you're just plain bearish. Lower highs, lower lows, probably headed to the 50.92 level. Momentum down, bias down. By the way, on this chart, you'd have to take out 55.50 to negate the downtrend. On XLI, which is the industrial sector, be careful. You got up to, after trading all under it, the 18-week average, got over it nicely, went 2 weeks over at the top part. That looks pretty darn good. And all of a sudden, you get an outside week down. Interesting. So you've spent your energy coming from there, and now you're sitting here. Is the trend up? Absolutely. Where could the next resistance be? Friday's high. If Friday's high, I said Friday, if this week's high, we're not on a daily chart. If this week's high of 105.23 is taken out this week, coming up, or next week, my work would then project we go right to 107.33. If you don't take that out, because the trend is up, I expect to see noise against that 18-week average and momentum not giving me an indicator it wants to turn down. Trend is still up. If one were to buy here, how much risk? Down to 9,700. So you've got to make up your mind. That's a $5 risk, about on the trade, probably 4% or whatever the price is if you break that in. On the energy sector, still bullish. You have a market with higher lows, higher highs. It's hard to be bearish, this market, given the environment. Now, I read some reports over the weekend that are claiming that the amount of usage in the United States that's being reported is false. It is being misled, blah, blah, blah. I don't know if it was Reuters. It was either Reuters or Bloomberg, I believe. You might want to go back and read about it this weekend to just get another point of view. My work is bullish. You're embedded until the red line closes under 79. I contend the pros are buying, and they're still looking for potentially 82.32 on that. When I go to SPY, I'm going to repeat, 21 of 25 years. You have put on gains in the S&P in the month of April. Doesn't mean that this won't be one of those four that lost. I have no way of knowing. Higher lows, higher highs, supports right here at 450.21. It's a huge risk, though, back to 415.12 if you put a stop under the recent low. Are you prepared to risk that? Because that's about 8-9% of the current price. EEM, lower highs, lower lows. Looks to me like you found major support in the market. I wouldn't be surprised if you try to rally to 47.61, the 18-week average, but I don't see anything on the chart that is other than a bounce. This isn't a change of trend. You have to get over right here, 50. Is that 49 or 50? Let's just see what that number is right here. 50.11. That would be the number you have to get over under the current pattern to break the downtrend. So a bearish market getting a bounce, I look for the failure up at that, if you can get there, that 18-week average of closes. GLD, you've turned the trend down. Gold is just acting terrible. Now, I don't think gold is super bearish. Contra to what I'm saying, how bad it's acting, I think this is all a big base for the market to go even higher in time. I think it'll be the inflation story, not the war story, that carries it, because the war hasn't carried it. You know, put off a nuclear event, what happens? I can go down the list. Gas, what happens if you gas somehow in Ukraine? So NATO might have to lay out the boundaries that it sets up a no-fly zone potentially. I was talking to one of my friends over the weekend over pancakes, and he was mentioning this, and I think it's right. What would create a no-fly zone, and what would create NATO getting involved? Any nuclear attack gets NATO all in. Has to get them all in. How do you control the fallout? How do you control the winds going to their countries? You can't allow it. Gas attack, why not take the skies away if they go there? You let Russia know what you're going to do. They've let us know. Now you tell them what you're going to do, because this war is getting worse, not better. The war focus has shifted away from the capital to other regions. The redeployment has taken place, and on the pullback you get to see the horrific things that have gone on. Lower highs, lower lows coming down. I'd look for big time support at the 173, 171.33, but the trend is down, not up, and I see nothing on this pattern that turns the trend up. What's been better is GDX, but my question is, how can it go up if gold goes down? That to me is a problem. So the trend is up. You're riding the upper Bollinger Band. Should you take out this week's low of 36.66 this coming week or the week after, it is a sign you're going to make a retracement into that level. Barring that, the trend is up. Momentum up, bias up, trend still up. Surprise. ARC, it still looks to me as though a low has been made for Kathy. So here you are, and here's the market. It loses the embedded reading the week of March 25th. That's often a sign. Price and the 18-day average are going to come together. The market's on its way trying to do that. We'll see if I'm right or wrong. It was interesting, her tweets over the weekend, because she's tweeting that the Fed is making a terrible mistake. It's going to put the economy into a recession. But if you don't do that, Kathy, you don't have the solution. What's going to stop the inflation runaway and the destruction of the economy? So it's nice that she made that statement. We all know that the Fed has a balancing act to do, but there was nothing brilliant about that. When I look at Amazon, lower low, higher high, resistance, support, sort of caught in no man's land here, really not doing a heck of a lot. Apple, again, I don't expect it to go anywhere from the upper Bollinger Band, could pull back to this 18-week average. You don't have a trend pattern. You've got a market that's doing this, just waving back and forth in there. Tesla, powerhouse, all-time high, 12,349, and Tesla's probably going to get a boost. It announced over the weekend it's done with building that ridiculous-looking truck that came out a couple of years ago. They're not going ahead. They've discovered that due to world events, it'll cost too much, takes away from their focus. The market isn't there as other trucks are beating them to the market, so they've given up on that. I think that's to be applauded. A great business decision. You missed the opportunity to bring that ugly-looking vehicle to the market, luckily. Look for resistance, 11,034 area. TLT, all right. You got down to the zone, and you've been riding the lower band, but you're embedded. We're getting a bounce, but it's not a trend change. Actually, something worse is happening. You're now getting ready for your crossover, where this week I would expect the 18-week average to get under the gray, the 4107. A bearish crossover often leads to another price break. So I view any rally here until you get the red line closing over 21 is where the pros are going to step in and sell this market and sell it rather aggressively. And I'll talk about that and a lot more over the weekend, during the week rather, up until next weekend. Now, you're looking at what I do in my videos for free, but you do know that I cover every week in the morning, Monday through Friday morning, a different video where I cover over 40 markets. These are some. I rotate what we're doing. I ask my traders what they'd like me to cover. They'll give me names. I'll bring them in. I'll take them out. And that's what that's all about. We want to be with the most current markets to do, but this just gives you an idea of some of what we cover in there. The videos are about 18 minutes long. They're done in a way that if you're on our website, you have a slide bar and it tells you what section you're in, so you can go to the ones that you want, see the sections that are covered. Each Saturday or Sunday, I do this, and then bonus videos are when I see an event that I think is important. I'll put out a bonus video for you to watch on that. So I'm a seasoned pro, give you my ideas. I own a stock company. I know what it's like to handle all that. I've been around the fundamentals, the technical analysis for 5 decades. I think I know the game. If you want a different opinion, different way to look at things from a charting point of view, simply go to our website, go under the word what? Research. You'll see the Spider ETF video. Give it a click. It'll tell you the whole program. I'm Ira Epstein. You have a great weekend. I'll see you tomorrow.